Hello my friends, it's Robert Miner with Dynamic Traders Group with a brief video update of a couple of markets for our YouTube subscribers and our Twitter followers. I'm going to take a look at a couple of the most popular markets that we look at in these videos that most of you follow. That's going to be updates on gold and the S&P. We do updates on these fairly regularly. Now I haven't done one of these videos for, 3 or 4 weeks. It's been a while, but not much has changed in the last few weeks for the probable outlook for these markets. So let's bring them right up to date and see how you can take advantage of it. Keep in mind that everything we talk about in these videos, you can apply to other markets and other time frames. So these videos are not just looking at current position, but also teaching you some analysis techniques to identify trading opportunities and how to take advantage of those. So even though past videos had to do with data that was right up to date from the time of the videos, they're all still educational. You might want to check them out. Okay, that said, let's get started and take a look at one of my favorites, the gold market. So this is the gold. It's the June contract weekly data, and it's just the weekly closing. That would be the closes for each Friday at the end of the week. A lot of times I like to look at closing data because that kind of takes out some of the noise and volatility, gives you a little better idea of the trend position. Let's take a quick look at where we're at. If you go back and watch some of the videos from a few weeks ago, you'll know that gold was in a position to break out several weeks ago. We gave you that information, and that's exactly what it's done. And it's been a pretty relentless bull trend since that mid-February low. So where are we at right now? What I want you to be aware of is gold is reaching a position from where a weekly high is typically made. Now, a weekly high means a high that lasts usually around 3 to 4 weeks or so. And because the higher time frame trend is bullish, the weekly high should just be followed by, let's say, a 3 to 4 week correction within that bull trend. Our outlook, as you know from past videos, is for a net bull trend at least until into the latter part of this year, probably into next year, 2025. So any decline should be corrections within that bull trend. But here we are, and I'm recording this about 1 o'clock on April 12th, so it's not quite the end of the week, pretty close though. Here we are as of the week ending April 12th, and I'm going to start from the top and work the way down. Between this week and the next 2 weeks, we have some significant time factors to complete at least a weekly high. Again, that'd be followed by a 3 or 4 week correction. So we have some timing. I'm going to go all the way down to these indicator windows. This is just the dynamic time projection report in Dynamic Trader program, the program I designed. It's not in any other type of program, but I'm just showing you the two key time factors here. That's the 100% alternate time projection, and it's a second smaller time frame, 100% alternate time projection. There's lots of other time factors in this window of time, but those are two key ones. Really, it gives us that 2 to 3 week window of time from when a weekly high should be made, and they're concentrated actually in next week. That's the week ending April 19th. But, week either side of that should be significant. Right above the current market is a price level at 24.39, and that's more than likely about the maximum price based on closes before that weekly high will be complete. That's the 162% alternate price, one of the 162% alternate price projections. So we're pretty close to what will probably be the limits before a weekly high is complete. Gold daily data, and on the daily data, we have some time factors between, most of them on the daily time factors are the end of this week. We can see, here's just two of them. April 10th and April 12th. We go down here in our dynamic time report, that's basically clustered right around between the end of this current week and early next week to make at least a daily high. Now, whenever we have the weekly position for a weekly high, anytime we make a daily high, we want to be aware of that because that's multiple time frame trading. Let's take a look at the, there's something I forgot to mention. Let's go back quickly to the weekly. On the weekly momentum cycles are dual look back overbought. They're actually triple look back overbought. And I'm using the fairly longer look back period so we get a fairly smooth cycle from overbought to oversold, but you can see they're in the overbought range. So we have timing, we have price, we have momentum, and we have a pattern for a probable weekly high here, probably by next week. So we have these daily time factors at the end of this week, and there's some others early next week, just the first couple days of next week, to complete a daily high. And price-wise on the daily time factors, they've reached right around this area we've been looking at for a week or two as a probable upside target. That's around 23.82 to 23.93 on the June gold. So again, we got time, we got price, we've got the patterns, probably a wave 5 of 3, an extended wave 5. And then the daily momentums are also dual look back overbought. They're in a position from where a daily high is made, followed by more than just 3 to 5 day decline. Typically, it could be the 2 to 3 week or so decline, sideways to down at least, or a correction, which coincides with the weekly momentum cycle as well. So be aware of that. There's one price level you want to be aware of here, and that's the close of December 27th. That's this swing high that I have labeled a wave 1. We're not going to go into the higher time frame Elliott position. But this price on the June contract, 21.3240. That's the price level. If gold is going to continue to be bullish well into the end, eventually into the end of this year or next year, it cannot close below 21.32. That's the December 27th swing high close. If gold were to close below 21.3240, and I know that's quite a ways below the market, but if it should close below that, there is no more bullish interpretation or bullish potential. I guess there's always some potential, but from the technicals we look at of pattern, price, time, and momentum cycles, is we could no longer look at this market as in a bull trend. It will have probably completed just a major top. I'm not forecasting that's going to happen. In fact, the position of the market strongly suggests that's not going to happen, but you've got to be aware of that. No matter how sure you are of the technical position and probable outcome for a market, if you don't identify what the market can do to invalidate that position and that outlook, then you're not a trader. You're thinking you're a forecaster, and you will eventually lose all your money. It's that simple. So keep aware of that price level. Let's take a quick look at the S&P. This is the SPX, the daily data, and I just have showing the data up from the October low, and I don't have any wave counts on this. We've been looking at the S&P, and it's the ES, by the way. It's not the SPX, it's the ES. We've been looking at the stock index, the S&P, for a potential, not just weekly, but multi-month high for quite some time. But the market has not made a confirmed reversal signal. Now, when I set up to make this video, I was going to give you, and I still will, of course, what I believe is a really firm reversal signal. And it looks like it's going to be made, although we have another 3 hours of trading today, so it may not by the end of the day, because it's based on closing data. So I'll just make it simple, is that if the ES makes a close today, or really at any time in the days ahead, below 51.8333, and we can see it's trading below that already. It's down like 79 points today. So it's a significant decline. If the ES closes below 51.8333, that will be the first confirmed bearish reversal since all the way back in the October 2023 low. And that will indicate that not just is a weekly high complete, potentially a monthly high. At a minimum, we look for the market to be sideways to down for about 4 weeks. Now, that's a minimum expectation following a close below 51.83. Looks like it's going to make it. And that would be confirmed if at any time after the 15th, which is just this Monday, anytime after the 15th, if the ES makes a new low off of the April 1st high. It's a little bit different date. I think it's today's date, actually, for the SPX, because its high was made, I think, on the 31st, but we'll stick with the ES for now. Why is that? Well, it's a real simple setup and indicator, and that's an overbalance of time and price. It's something Gann talked a lot about. I'm not going to go into the details because I'm already running up to the 10-minute limit I should have on this. But if all you need to know is if the ES closes below 51.8333 today or any time in the future without having traded above the April 1st high, that is a significant confirmed bearish reversal signal, and a confirmation of that signal would be any new low off the April 1st high after this Monday, April 15th. Well, that's it for today, my friends. You want to keep up to date in these and all the major financial markets, go to dynamictraders.com. Sign up for free with our DT Traders News, and we update the Traders News once or twice a week. And you might want to check out our DT Reports, where we update 3 times a week all of the markets, of the position of the markets, the trade opportunities, and trade strategies. That's it for today. Robert Miner, over and out for now.